Sergio, thank you so much for speaking to Bloomberg. Look, when you look at the combination, it seems to be going at pace. You seem to be on top of it. What's been the hardest?
Well, the hardest is, at the end of the day, is to manage both. The fact that we are going through a massive exercise, the first ever merger between two GCF banks, but at the same time, we have to stay close to clients, serve clients, fulfill their expectations, helping them to navigate these challenging macroeconomic and geopolitical times, and so that's the biggest challenge. But I'm very happy the way we are executing on the strategy. We are making very good progress, and we are also looking forward to complete our integration in a speedier way.
Were you relieved that there weren't any nasty surprises?
Yes, I mean, I think that I always felt that this integration is not risky, it's complex. And it takes time, it takes focus, it takes dedication. Of course, we cannot underestimate that the situation at Credit Suisse was as a situation that was clearly indicating that the business was not viable any longer. Credit Suisse has a very strong people, clients, franchises, product capabilities, but the business model was not there. Was not the right one any longer, and I think that the excellence part of Credit Suisse now, as part of UBS, can flourish and make UBS stronger.
What will happen to the Credit Suisse brand?
The Credit Suisse brand, outside Switzerland, we will phase it out. We may keep it for niches situation, but the brand that we will use outside Switzerland will be UBS. In Switzerland, until the end of 2024, we will keep both brands as we go through the integration of the Swiss operations.
You talk about the complexities. Of course, I mean, this is a masterful job that you needed to do. How important was it to really almost get everything done, or have a blueprint today, so that customers, so that a lot of your also employees knew what was going to happen?
Yeah, of course, we announced the transaction 5 months ago. We closed it in June. And so everybody has an expectation that we have an answer for everything. But so we made a commitment, for example, in the Swiss case, where people were waiting for our answers. We made a commitment to go deeper and really analyze every possible options. At the end of the day, we did it as fast as possible. The outcome was crystal clear. The best option is to integrate, and that will help to give at least visibility and about the future to many of our people and our clients. But although nothing will really change between now and 2024 for clients, and we're going to make it smooth for clients to be onboarded at UBS.
How much political pressure are you getting?
No, not a lot of political pressure. I think that's in general in Switzerland, I would say people do understand that we were asked to step in to stabilize a situation, and UBS has demonstrated through its strengths in terms of capital, business diversification, and clear strategy that could be part of the solution. So the political environment is quite supportive, also because of the fact that we have been very swift in giving back the guarantees and all the government support when not necessary.
I mean, do you feel like people are nostalgic about what could have happened? You see, you're very focused, and at the end of the day, this is a business.
Yes, there is an element of which is understandable. I mean, we are talking about a brand and a legacy that has 170 years, was a pioneer in many of the Swiss economic developments, and so we are not downplaying that. But the reality of today of Credit Suisse is a reality that needs a deep restructuring, and as we go through that, we have to look forward. What is the best for Switzerland? What is the best for clients? What is the best for employees? And there is no room for nostalgic considerations as we do that.
Sergio, when you look at the AUMs and the NNAs, the net new flows, how much of it are actually coming from UBS?
Well, I think that, first of all, I think it's very important to see that already in the second quarter at Credit Suisse, although we had, April and May were still negative, negative flows, In June, they saw positive inflows after the closing, so a good momentum, clients coming back. At UBS, we had the best second quarter in a decade in terms of net new money, 16 billions. So quite impressive. And now, as we speak, in the third quarter, we see inflows on both platforms, not only in wealth management, but also in the Swiss bank, and which is a testament on how much clients really believe in our story, and it's a testament to the dedication of our people in staying close to clients during those difficult times. And clients are rewarding us with loyalty, and we are counting on taking back as much as possible of the 200 billions that we lost in the last few quarters.
Where's that money coming from? Again, when you look at markets, it's pretty volatile, so it's pretty incredible that you have money coming in.
Yeah, from other banks, or a lot of clients moved away and parked the money in other places, and of course we are able also, despite the fact that we lost some talented people, we are seeing that clients are holding out to their asset with us, and they are not necessarily moving all their assets to the new employer of the people that left. And our focus is really to retain assets and to regain back assets.
Sergio, talk to me a little bit about what that means going forward for example, how you deal with some of the riskier clients. So, the clients that could be subject to sanctions or could be seen as tax evaders.
Well, look, in general, we are continuing to implement our framework in terms of risk profile of clients or activities. Is not dissimilar to the one of Credit Suisse. Well, people under sanctions is a completely different category of people. I mean, there is no room for people who are evading their tax liabilities. Of course, we may have discovered that somebody is arbitraging the system and escaping it, but of course, we have zero tolerance for that kind of business.
How much are you expecting inflows to increase as markets could stabilize because of what central banks are doing?
Yeah, I think that, look, first of all, we are still counting on wealth creation, growth. I mean, if you look at our ambitions, as I mentioned before, we have a dimension of integrating and managing the day-to-day, but also growing our business. And as the economy grows, our clients monetize situations, we want to grow our asset base, our share of wallet with those clients. And again, our focus right now is to regain back as much as possible of those 200 billions Credit Suisse lost in the last few quarters.
So you're basically flying a plane whilst building a new plane. What takes up most of your time? Building at this stage is a lot of talking on integration, and I keep a little bit of focus also on future growth. I need to almost play around. My time, but the vast majority of my time is on integration, on managing the bank. But I can't really forget that this is one step in the evolution of UBS. And as I look forward, we need to prepare UBS also for the future. So this is something that is very good, because Credit Suisse is not really changing our strategy. It's complementing our strategy. It's accelerating our strategy. We're going to manage $5.5 trillion, or we are managing $5.5 trillion of assets, right, across private and institutional clients. So this is huge, and allow us to really think about how can we now go to the next level. So now we are very focused on integration, on executing our current plans, but we can't forget that the competition and the market is evolving, and we need to stay very focused. When you look at the deal, it also looks like a good deal. Do you think the AT1s had a hard time, given where we are now?
I guess that any averagely sophisticated person looking at the results that were published today will come to its own conclusion.
What, that Credit Suisse looked ugly?
Well, I think that's, it's no way, when you look at these things, from our standpoint of view, it is crystal clear that over that weekend the bank was not viable anymore. And it was not just an issue of liquidity. I mean, this is a very simplistic definition of the situation. Some liquidity would have bought a couple of weeks, but the structural issues that were there needed to be addressed.
Who's to blame for that?
It's not for me to blame people. We are here to be part of the solution.